Hello, everyone, and welcome to Screw the Stock Market. I'm really excited to have you tuning into the show today. And I wanted to do a quick introduction because today's episode is a little bit different. We are repurposing an interview that we did on a meetup that we host. It's called Alexandria, the Alexandria Real Estate Investment Association. And we host this meetup every month on Zoom. It's usually the last Monday of the month. And people come and we talk about deals that we're doing, what we can, how we can help each other actually close those deals. Sometimes partnerships are made, sometimes deals are struck and there's opportunities and everything. It's cool. I'm very happy with it. And then this time we had a guest come on and she was going to share about her remarkable success. Her name is Raquel Adkins, and she essentially went from a complete beginner to hundreds and hundreds of apartment units within the span of like 4 months. And it's remarkable. It's incredibly fast. And she shared with us some of the secrets as to how she did it. Things starting with things like mindset, day to day, what she's doing and how she's finding partners and all this stuff to be able to accomplish something that's very impressive. And so I just thought after listening to it again, I said, we have to put this on the podcast, even if the format's a little bit out of the ordinary. We really do believe that this is something that will inspire you and bring some real value and maybe some tangible steps that you can start to implement in your business to try to reach those next levels of success, regardless of what path you're doing that in, whether that's in real estate or multifamily syndication or single family, whatever that might be. So again, it's just a really great episode. I hope you get a lot from it. Thank you again for tuning in as always. And we encourage you, please, Aziz and I have set a goal for ourselves to be the best listeners in podcasting. And so as opposed, in this format, we do a lot of talking and not that much listening, but we do want to be the best listeners, but we have to do that outside of podcasting directly. So we want to ask you to please go to our website at screwthestockmarket.com and engage with us. There's links there for you to be able to write to us, to contact us, to schedule calls with us. And we really do want to understand what it is you like or dislike about the show and how we can change it up and bring value to whatever it is you're looking to get out of this. So thank you for being part of our community, part of our family, and I hope that you enjoy the episode today. All right, Raquel, welcome. Thank you again for agreeing to come and share with us. I've had the pleasure of meeting you once or twice before on different Zoom meetings like this, and you're incredibly charismatic and energetic, and the things you've done have been very impressive. So we're eager to hear more about it so that we can learn and do the same thing.
Yes. Well, hello, everyone. It's such a pleasure to be here. When Alex called me and invite me for this, I'm totally down because, and first, I want to congratulate you, everyone, for being here and for the interest on real estate, because I believe that I always think of real estate of a way to build wealth, and independence, financial independence and financial freedom. And it's the best tool to achieve that in a short period of time. But it's not a get rich scheme, quick scheme, but for sure you get rich sometime, if you stay persistent. And it's like I went to a conference the other day and the guy said, I'm a millionaire, I just haven't got paid yet. That's exactly where I stand at the moment. And real estate is a journey. And if you continue in a path and every day you do something towards it, money will come. And I believe that the first thing that we should talk about, and when you think about just real estate in general, is because of your why. I think that's how I always like to start my journey, start telling my story, is because of your why. My why is exactly how Jonathan said, it's to leave a legacy behind for my kids. I'm from Brazil. I've been here in the US for the past 10 years. And I came here with a mindset of conquering, of breaking the curse for my whole entire family, the 9 to 5 and the rat race, and everyone has to go to the same jobs or schools or things like that. And I wanted to break that path and build actually financial freedom. I was searching for a way not to get me rich, to get me wealthy, to be able for my kids not to have the struggles or not to have money issues. I always like to call it, money issues. I do not want to have money. Money will bring all the kinds of problems, but not the money itself, the lack of having money. And so a little bit of my journey. When I came here, I started working as a secretary in a property management firm. So I always kept seeing the other side of the table. There's big investors coming in and demanding all sorts of things, and then the property sold to another owner. And I was always searching for how can I be the other side of the table. There was something that I always was trying to figure it out. Like, what do they do? Are they very smart, very selective kind of people? They had a very good upbringing, and then I started searching for ways to get into real estate. My husband, I met my husband here, and then he works in construction. So he built commercials and residential back in LA. And I said, that's perfect. Let's start digging in of ways to start in the in the real estate industry. And I think that the best way and the easiest way to start, and a bunch of people start this way, is from flipping houses, is the easiest way. I didn't even know about rental properties. So I started flipping houses. We made a good amount of money, but I felt like this was reaching cash, but not really wealth building. This wasn't going to get me out of working, or this wasn't going to pass on a legacy to my kids and my grandkids. That's my ultimate goal, So I start searching more and more and more of ways that I can start. And a lot of it had to do with a mindset. I'm not from here. I have visible tattoos everywhere. I have an accent, I'm a woman. So I had a lot of odds against me, and it was a lot of mind struggle and mind change. That's something that my journey started when I started to change the way I feel about everything, and truly believing that I could do it and I could be there. And once all of that barrier was just destroyed, I became so powerful mentally. I'm still learning. I'm still pretty new. So since July, I joined Michael Blanc, which is a mastermind for multifamily. So we decided to jump headfirst into multifamily. Why? Because I thought, first we started flipping. We made a good amount of money. And then we decided to change states altogether. We came to live in Dallas, in Texas. We couldn't find the whole crew that we had back in California that made our flipping career very, very easy, because we had contractors, we had lenders, we had everyone just available for us. So it was very easy for us to continue flipping houses there. And we thought that we were going to have the same luck here, and it wasn't the case. And again, I was searching for something that could build wealth, not just cash in hand. So, and then I came across the BRRRR strategy, which is basically you rehab it, you refinance it, and you rent it out, and you repeat. But I thought, how long is going to take? I came up with a freedom number. Like, how much money do I need to make a month for both my husband and I to not have to work, for all of the bills to be paid, and still something left, And I came up with $10,000. I think that's like the sweet number for everyone, like $10,000 is a perfect number. How many houses do I need to get to come up with $10,000 of passive income monthly? And it was a lot of houses. And I thought, well, it takes me 6 months to rehab a house, then another 2 months to rent it out. And then it keeps changing, and it's a very high turnaround, because every year the lease ends and all. And I thought, well, imagine if I needed 20 houses, because every house, after like rehabbing and paying back the hard money loan and refinancing to a longer debt, it was going to probably cash flow $200 per month. So 200 to get to 10,000 was going to take me a lot of houses and a lot of time. And I'm in a rush to get to where I want to be. So I came across multifamily investing, and I became hooked right away. And I remember my first job as a property manager, and I'm like, that's what I'm going to do. So I truly just jumped head first with a sense of urgency, with a sense of obsession, And now that I've been reading a lot of books about it, and books about from millionaires and people, very, very established people in the industry, they all seems to have the same mentality. So I was in the right path. I don't know if that helped me get to where I am so fast, but it for sure helped my mindset, So Michael Blanc was the one that I chose to be my mentor, and I did the whole program within 2 weeks. And I have two kids. My husband had to go back to work for me to be able to invest in this new career. We changed path completely. So we've been working as a flipper for the past 3 years, and he didn't need to have a W-2. But then for me to take a step back and learn a whole new industry, he had to go back to a 9 to 5. But all of that, together with my kids, of my husband having to go back to 9 to 5, all of that, I use it as fuel, as a sense of urgency. My why are my kids, my family. I want to be able to help my dad back in Brazil. I want to be able to buy all the material things, right? I want to talk about as well, after you achieving, there's something that Michael Blanc told me, and I didn't think, is like, when you grow up in a certain, not poverty, but money was always an issue. You always think that your ultimate goal is to be rich, right? But then eventually, after you get all this money, what you're gonna do with your life is in stake, because you're gonna have all the cars and all the travels. You're gonna help everyone around your family. Then what you're gonna do with your free time? It can be very dangerous. And I don't know if you guys know Rod Cleef. He talks about it, how he was very depressed. He was a millionaire. He reached all his goals and he was depressed because he didn't think further. So I think a main thing that you have to work on is truly deciding your why. What is your why? What is your fuel to get there? And a plan of getting there. So if you want to start one house at a time, that's a way to go. But the reason why I chose multifamily is a way quicker. So then how I got to close my first two deals were, one of my investors, actually, we bought a house from him, and it was the only flip that we did here in Dallas. And it was a nightmare. All of the horror stories, everything happened in that house. It was a massive house. It was a 2,500 square footage, and it was 1950s. I think it's even lower than that. I think it's like 1930s. Beautiful home, an hour and a half away from our house. And we could not get any contractors. That was the last flip that we did. And that's kind of helped me decided to go to multifamily as well, was because of that flip. But something came out of it being great. Not only we flipped the house ourselves, my husband and I, but we got a bunch of tools too, write-offs, that was a good thing too. And a bunch of techniques. Now I know how to drywall, but that's not how I want it to be. It's like, that's within the real estate, but that's not what I wanted to do. So then one of the investors that sold the house actually liked our spirit and how dedicated we were to get the project done, that he called me within two weeks that I was in the new program, for multifamily, looking to invest $1 million into multifamily. And he knew that I was going to get into that. And I said, that's the perfect time, that's the perfect time. I just signed up for a mentorship. I'm not quite ready, but let me talk to my mentor. So I talked to my mentor, and he had a deal on the contract that could have me coming in as a capital raiser. So that's how I started. And I went that conference that I mentioned earlier. The guy said, you need to put yourself in a situation to be lucky. And that's exactly what I did. It didn't just knock on my door and say, hey, Raquel, do you want your start in the multifamily industry? It wasn't like that. I put myself in a situation because I was digging, I was studying, I worked on my mindset. I was wishing I did everything that the program said for me to do, or any podcast or any mastermind or any mentors, whatever they did to become millionaires. That's exactly what I did. I print out my daily goals every morning. I have my morning ritual. I said, whatever they did, I'm going to do it, and that's what I did. It's like I print out a bunch of affirmation saying I'm capable, I'm worthy, I'm deserving of doing great things. So that slowly made me very powerful. So I came across this deal, and I said, that's my ticket, So I joined the team, and guess what? That deal didn't come through. That the investor actually fell through. He did not come through. But because of the SEC, which is the regulation, the institution that regulates this kind of investment, once you accept someone as a GP, you have to have them, regardless if they raise money or not. So I wasn't going to let that distract me from being in a team and coming as a strong player. So I got my boots on the ground, and I started raising capital. I did not know how to do it. And I used my social media as a free tool to get investors. And I actually did not come in with $1 million, but I did raise 250,000, which I'm very proud of, because my mentor, my partner in those 2 deals, he couldn't raise any money on his first 5 deals. So it was great for me to be able to kind of take that fuel and just go with it. And then very quickly after the first one was closed, we closed on a second one. And that one, I did not raise any money, but I came in as an underwriter. I found a deal. So there are a lot of ways that you can start with multifamily. And the reason why I started with multifamily is because you can scale quickly. The money is millions instead of thousands, for everything. But it is a long thing. It's not something like flipping that in 6 months you get a nice 50, 70,000 check. It's not like that. It's like I will see the true money in 3 to 5 years when we refinance, when we sell the property. That's when you truly see money. But it's like the game of Monopoly. I bought this property. Now I am in 72 units. So I get a paycheck for this one, paycheck for the next one, and then I have $200 from one deal, cash flow monthly, and then I have $500 from the next deal. So that's how you scale, is stacking them like Monopoly. That's basically how it started. There was a lot of mindset work, to become powerful mentally. All of the cliches. Sometimes I used to think of being positive as being cliche, but it's not. It's like if you start educating yourself in the matter and start looking at videos about millionaires, they all seem to do the same thing. And this is exactly what I do. I'm nowhere to being a millionaire, but I'm on a path. I'm on a journey, and that's how I got here. You guys have any questions? I have a lot of stories to tell you guys.
I'll start with just a thank you. That's really cool. That's just very motivational. And, you are exactly as energetic and charismatic as I remember. So thank you for that. One question for me is, the mindset, that if that's the starting point, what were the specific things? I mean, you mentioned some of it, right? Like the affirmations and stuff like that. But like, I don't know.
First, I think the first of all is my why, is come up with your why. Why do you want to do this? I think kids and family are the easiest why for us, But if you don't have kids and family, then something you want to do with your life. There's no judgment. There's your life and whatever you want to do with it. And another thing too, that it is part of the mindset change, is thinking big. Like right now I'm reading a book by Grant Cardone called 10X. And that's exactly his mentality. It's like anything you think 10 times more, because it is achievable. And it's so funny because on my vision board, I wrote in there 1,000 doors by the end of 2024. And right now I'm already at 600 doors, like it's going to take me no time to get there. I'm like, I'm going to put another 2 zeros in there, like think big, always think big, because and what he says in the book that he does is every night and every morning, he writes down what he wants to happen in that day or what he wants to achieve. And I started doing that. I like every single thing that I read that someone was doing it, I was doing it. But first one was a moment of clarity when you wake up. Like I woke up and I just had one moment. And this, mind you, it's like my kids are around me asking me for things. I just shut everything down and just think for a second that I want this day to be amazing. I want to achieve everything I want. I want my plans to keep going. Whatever affirmations you want to do for that day, for that morning. And then what I did as well was print a bunch of affirmations, whatever you want to affirmate, like just you want to be powerful, you want to close deals, you want to good news phone calls, you want lenders to just approve you left and right, you want deals to be presented to you. I wrote a little piece of paper and I put it all over my house, like in the bathroom, in the door. So anytime I pass by, I read one of the affirmations, And I said to my husband, well, you cannot do the program because you are working, but the only thing that you can work right now is in your mindset, So that's what he did as well, So he is reading every time that he passed by, he is reading it and he's wishing just as strong as I am. So the first thing that you have to do is your mindset. And it's as silly as it can sound, as cliche as it can sound, that changed the whole entire. I remember going to my first conference. I was like, "What am I doing here?" Like I felt a sense of inferior. I felt inferior every time I saw a very wealthy person, because I'm not used to being around them, And I remember going to a conference and all the cars parked outside, and It's like I was so intimidated, and I'm like felt so out of place. For example, when you see a deal package, when you receive a deal package from a multifamily project, you will see all the pictures in there, and I'm like, how am I gonna? I'm gonna stick out like a sore thumb, like just me with my tattoos, First, you don't really see women all together, much less an edgy women. But all of that in my accent is like sometimes I thought if I call an investor, they're gonna think like it's a scam, because that's how sometimes I get calls and it's always with an accent or something. I'm like, you know what? All of this is gonna be destroyed. If they want to ask me something, I'm gonna know what to answer and I'm gonna go for it. And that's what you have to do is all mindset and your why and your reason that you want to get it so bad should just destroy any kind of barriers that you put on to yourself. That's kind of like and it's beautiful because even if I change path eventually and I don't want to do multifamily has changed my mindset. Like had multifamily made me very, very strong, powerful. My journey into multifamily and my goals. Like my goals are very strong and I'm only getting started. So I started July. But at first of all, just mindset, work on your mindset, have a clear vision of where you want to go, how you want to get there, and who you want to help. And after, have a bigger goal as well, like what you're going to do. My goal after I reach my first stage of goals is to become a voice for minorities, because I believe that in this industry, and I keep going to conferences, and everyone there looks the same, like your white privilege, Harvard looking man, I want to change that. I want to be a spokesperson for women, minority, immigrants, like everyone that doesn't quite fit the profile. I want to destroy that profile. There is no profile. If you know what you're doing, you can do whatever you want. You can be whatever you want. And I am the proof. I want to be the proof to you guys that it's possible. Yeah, for sure.
I love it. I love it. Well, I definitely want to open it up. I mean, really, guys, you have Raquel here. You have her attention. If anyone else has any other questions, I see Jonathan. Thank you. Please.
Raquel, I wanted to ask you how about your journey to raising the money. You said you raised $250,000. What was that like for you?
So for multifamily investments, you have two types of deals. You have a Schedule C and a Schedule D. So B as in ball. So the 506B, you cannot promote online. And my first deal was actually even harder to promote because it's a 506B, meaning I could only promote it to people that already have an established relationship. So it was extremely hard because, for example, right now I'm raising one for a 506C, which is public. Anyone can, I can advertise everywhere, but only accredited investors can invest. So there's a downside to both of the deals. Like one you cannot advertise, and the other one you can, but that person have to own. There's a reason why you are accredited. I always get it confused. I think you have to make a certain amount of money per year to be able to be accredited. So it
It's
was
pretty much for rich people.
It's basically rich people. It's like you have to make a lot of money or combined with your wife and have a liquid $1 million or something. So it's easier because then I can blast my social media, and I just created my social media. So because I did not get the $1 million investor, I was not going to make that defeat me or kind of like, yeah, you can go in, but I know you didn't do what you're supposed to. I use that as a fuel. Again, remember mindset. And I just start going through my list of everyone I knew in the past 10 years that I've been here. Everyone that I knew here in the US, I called. I called them and say, hey, remember we met one day at this event. Right now I work with multifamily, and I just wanted to know is exactly what I've been trained for that as well. That's what something that Michael Blanc said in the training. Like you call and you say, hey, I'm looking for someone. You never say, do you want to invest? I always ask them, like, do you know anyone that would be interested on investing with their retirement funds or 1031 of any of the properties they sold, or anyone that wants to get in the multifamily investment field? Do you know anyone? And believe me, a lot. It's like a lot of people knew. And I called more people than actually got converted to investors, but that was my that's how I did it. For example, that's what I did. I made a list of people and I called them every day, and then they recommend me to someone else. I would call. I started connecting with people online, use my social media as a thoughtful leadership platform. Like there's various ways that you can do it. You can have your podcast, and it's very important. I keep saying that to my partners because social media is there to help us, is to promote your business, and being using these platforms to further your career is very smart. So there you go. Someone posted in there exactly what accredited means. Exactly. I always get confused. It's 200,000 annually or 300 times joint income. Basically, rich people. But I could not find these people because and plus, look, I'm not from here. I don't know many people. I don't have my list of cousins and uncles, and I'm not from here. But I made a list of everyone that I knew, even like neighbors or anyone on my phone list or on my Instagram, on my Facebook, personal Facebook. I call everyone. I even call people from Brazil because I know there is a way that you can invest out of state, out of here. So I did it. And I it was my power, my strength, like my will of getting things done that actually got me to investors. And one was my stepdad and another person that just met me on Instagram. It was following me for a while, and he saw that I changed my journey from flipping to multifamily. He's like, I'm all down to invest with me. That's how I got it. One invested 150, the other one 100. That's what I do. When you have a Schedule C, which is the one that you can promote it's much easier. But then you can't really, you can only get rich people. You can't get your regular, because for example, on minimum investment is normally 50,000. But then when it's Schedule C, is normally way more than that. Like 100. Like I'm raising right now, and the minimum is 250. And people send like 3 million at a time. So I'm still connected. That's something that I highly recommend. If multifamily is something that you want to get into, work on your capital raising skills more than anything else. Because everyone else, every other role, you can get a third party company to do it. For example, property management, or you can get a contractor to do your rehab. You can partner up with other operators to do certain things that you don't know. But the power in multifamily investment is if you can bring capital. If you have access to rich people that wants to park their money into multifamily, that's the number. If you want to get into this, start right now creating your social media or meetups, or talking to people that you already know, letting them know that you're getting into this and educating them about it too, and it is the best. I'm a little biased to say that, but for me, is the best way to build wealth is through multifamily investment, for sure. It just takes a little bit of time.
Love it.
And another thing, I always say, like, mindset, and then work on your capital raising skills, very, very important. And believe in yourself too, like it is there for all of us. Is there another question? Oh, no.
Yeah, Michael, please feel free.
Hi, Raquel. So when you were talking, you had some terminology in there that you mentioned that kind of went over my head, simply because this is a little new to me.
Sorry about that.
Very new to me. You said you have 600 doors. So when you say 600 doors,
it's just to make it fancy. It's like some people will call it like they like in your Instagram bio, you can put like numbers. I think it's silly because it doesn't matter how many numbers you have or how many millions under management. But there's two ways to kind of like sell it's like your resume, right? When you talk in multifamily, well, for example, when you go into a conference and you introduce yourself and they ask what you have done, you basically, or tell them the number of units you have. For example, I purchased an apartment building that has 40 doors. So now I have 40 doors, 40 units. Units, doors, same thing. So basically, I did, my first deal was 40 units. The second deal was 32. And now I have a deal on the almost is closed. So it's about to be closed in, I think, 3 more days. And it's going to be a 725 units. So that's basically going to, altogether, you just stack number of doors. Like that's how a way that you can say how much experience you have is the number of units. For example, if you purchase an apartment that has 100 units, Now you have 100 units under management. Or you can classify it as the millions. For example, the first one was 3 million, and the next one was 2.8 million. So now I have 5 million of assets under management, AUM. That's something that people use it as well. So it's kind of like your business card, kind of like your one phrase to say what you are. I'm Raquel Adkins. I have $750 under management, around, I think it's coming up to $45 million of assets under management. That's basically it. I don't like to say like that because I think the number of units and the number of millions that you have doesn't define how good or bad you are, so, but that's kind of like in the industry, that's how they label you, I guess.
Got it. So I guess someone like me, I can say I have 10 doors.
There you go. Right? Use your door numbers.
Okay. My second question is, besides being rich and having the money up front, and besides
you don't need the money up front. Oh, you mean like for an investor?
For an investor, I'm just going through the options based on what I've heard you say. So having the money up front or raising capital.
Yes.
Or is there another option besides that? If I'm the person that just does not want to go, raising capital and calling people, is there another method to getting the capital that I need?
Yes. So to be in a project, to be in a deal, you can either be a limited partner, which is that's the guy with the money, just basically rich people, athletes, doctors, lawyers, very rich people that have a lot of money saved in the bank account that is not producing, they actually paying tax on it, or a lot of money on the 401k that wants to park it somewhere. And stocks, as you can see, stocks are very, very bad at the moment. So it's very volatile for the inflation. Like when it's time of crisis, stocks just go down. So there's another reason why I chose multifamily, because it has a hedge against inflation big time. It's just, you can write it out and you don't get cash flow, but then you still banking on the appreciation at the end of the sale. So it's very, very steady kind of investment. So that's something that you will be teaching investors about it. Like, hey, when you think about parking your money, you always think about the same things, like stocks, bonds, and other kinds of investment. Not everyone knows about multifamily, and they think all of these doubts that we all have, like you need a lot of money. I don't want to be a landlord, all of this. So there are two ways that you can start. Being an LP, a lot of people do, when they have money or they have 50,000 that they just want to do it. What I do that is different from other operators, that actually I feel like majority of my LPs, my limited partners, people just with the money, wants to eventually become GP, which is basically the operators that oversees the whole project, like myself. They want to do it, but they don't want to do too much work. Or some people just don't want to do any work whatsoever. They just want checks in the mails kind of guy. So that's one way that you can join, but that's not what you're here for. You're here to build wealth, and that's being a GP. A GP, what is going to do, for example, and how you get paid being an LP is depending on the deal. For example, this deal that I'm closing in a couple of days is a 2.85 multiple, meaning if you invest 100,000, at the end of the 5 years, I'm going to give you 285,000. Projected is always projected. You always have to say projected because you never know. But minimum, you're going to get 260,000 for it. So that's how you sell it to your investor. So that's being an LP. You get a cash flow monthly. That's another thing beautiful about multifamily is you get a cash flow monthly. Cash flow is basically the income that this property produces minus the expenses. And then whatever is there is divided by a bunch of things. All of the investors, it goes to the LPs, the limited partners, goes to the GP, and some of them goes in the reserve, depending on your business plan, right? So that's how you get paid. You get a little bit of cash flow. For example, for the first deal that I had, you get maybe $300 every month of cash flow. And then a year two, we refinance, give you back 65% of what you initially invested. And then the remaining 30,000, you leave it in there, and you get probably every year, because you would paying that down, you get more and more cash flow. So then the first year is like 300, the next year, the second year is like 400 and something. By year 4 and 5, you're probably getting around 800 for cash flow for a small deal, for a 40 units. And then where we sell it is when you get your true money back from the sales proceed. So that's a way that you get paid. And then you have the GP side. And the GP side, you have a bunch of roles that you can play. For example, you can find your deal. You don't need to have the money. It's like, that's why people think, well, I would need to have, like, buying a house. You need the 30% out. That's why you need the LPs. The LPs will come with the capital. You can come in as finding a deal. Like if you find a multifamily deal that is good, obviously you will need to know how to underwrite it or have someone underwrite it. That's another role that you can do. You can be a underwriter, like you can partner with someone like myself. You just learn how to underwrite, and I hate underwriting. So I send the deal to you and you underwrite it and tell me, hey, Raquel, is good or not? I hate underwriting. That's why I'm never on the Zoom calls and Michael Blanc, Alex, because I hate it. It's just numbers and it's a spreadsheet. I'm a people's person,
I can see
That's
that. Yeah.
one way. Yeah, you're not going to catch me there unless I have a deal that I want you guys to look over. I hate it. But that's the beauty about syndication. You partner with other people that likes doing other stuff that you don't. That's how I like to call it, So you can be a capital raiser, people that find the LPs, or people that will go and get them. You can be a capital raiser, you can be an underwriter, you can be a deal finder. For example, if you find a deal that makes the numbers or you think is good or is off market, you present it to me, for example, or to any other operator and say, if you like it, I want to be in as a GP, I found a deal, So there are many ways that you can get GP shares. Obviously, the more that you can do, the bigger your pie is going to be. Because just remember, just to be a little more technical, I don't want to confuse you guys too much, but the split normally is 70% for the people that brought the capital, basically the down payment, the money to rehab the property, and then 30 for the people the admins of the whole project, right? But sometimes it can be 80, 20, it depends on the deal. That deal that I'm doing is actually 85, 15. So it's really good for the LPs. But that's the ways that you need to be creative in times of crisis like we're going right now, because people don't want to invest. They're scared, And plus, our business plan includes raising rents to be able to execute the business plan. So a lot of my investors, they're like, how am I going to invest with you if you are telling me that you have to raise rent when people are getting less money, when they're paying more bills? How you get done? So there are many ways that you can go about this, but that's how you can do it. You can be a capital raiser, you can be a deal finder, you can be an underwriter, you can be investors relation. It's kind of, I like to call it like just a glorified admin. That's basically what it is. So it's basically someone that emails the investors, or that the LP that wants to get in touch with you. You are the person in contact, and you email them, you let them know what's going on and how the project is doing. There are many roles that not necessarily you need to come in with money. And for example, another good thing as well is when you purchase a building, because that was my first block. I'm like, how am I going to purchase a $30 million asset? You don't need to. I'm like, I don't have that liquid. I can be a sponsor. I can be a KP, which is, I don't even know what it stands for. You see, guys, that's how I'm doing business. I don't even know what the KP, what KP stands for, Alex?
I think it's key principle.
There you go. You know what I mean? KP guy, you call him
That's
up.
a really cool one. I think a lot of people don't know about it. So pretty much you find someone who's wealthy enough, because one of the loan requirements, if you're going to get a big commercial loan, is that you have to have the net worth of that loan. So if you want to get a $30 million loan, you're supposed to have $30 million of net worth.
Liquid. Yeah.
But it doesn't have to be you. It has to be your team.
And then you get the KP,
So you just get a rich guy.
There are some guys that that's all they do. All they do is sign up your loan application and they get a share of it. What I'm not good still is the waterfall system, which is basically a way to kind of like get everyone to pay. Like how much percentage of that 30,000 you share to everyone. That's what I'm not very good at that, but that's how you do it. You give him a percentage for that. So that's the beauty about syndication is you get together with a group of people and everyone brings something and everyone gets a little share. So whatever you don't have, you can come in with the labor, like myself. Like where I shine is asset management. That's what I am. So what is our asset management? You have the property management that is kind of like the nanny. The property is your baby. And then you have the mom, which is me, the asset manager. It's basically overseeing the whole operation of the property. Like once we buy the property, you have to go and knock on the doors and give them new leases. I'm right there with the property management, because like, you're not just going to hand your baby and say, hey, take care of it. They're not going to do a good job. And especially on large number of units, like for that 750, I'm just one more client. They must have all the properties out there. So they're not going to take care that much of a property like they should. So you are there to oversee the whole operation. So you have a meeting every week, then you trying to figure it out, how many units were renovated, how much rent are we going to raise, and things like that. So that's where I shine. And then my husband comes in with the whole rehab side of it. So when we look at a property, he comes in and say, hey, the best thing that we can do is change to LED lights. So then we cut on the electric bills. We can do zero escaping. So then we don't have to pay. Your main goal when you purchase an asset like that, a commercial asset, is to minimize expenses, maximize income. Then the more money you make, the more money you're going to sell it at the end. That's how you kind of like the comps. An asset, a commercial multifamily asset, is not based on how much the comps are selling around, like a house, for example. If a house down the street sold for 200 more than my one, I'm going to put 200 more. It's not like that. It's based on the income that the property produces. So when you go in and you raise the rents, automatically you raise the value of the property. So it's beautiful. But then at year 2, after you renovate the whole thing, you can refinance, get some money out, pay majority of all of your LPs out. My goal is not to refinance in year 2, just keep their money tied in there for 5 years, giving them cash flow, giving them sales proceed at the end. But then I refinance, get them all out, give them the 285 at the end of the 5 years, and keep the property to myself. That is the goal. But that's going to take me a long time and a lot of money. So that's why I like the smaller deals first, because to get everyone out of a 700 and something units is going to cost me a lot of money. I would probably have to refinance and pay some money. But that's the goal. That's how you build wealth through multifamily. You buy small deals with a group of investors, hold it for 5 years, give them cash flow and give them a share of your sales proceed. But then at year 5, you refinance that baby and you give them back the money and say, goodbye, thank you so much, and keep that property for yourself, just cash flowing monthly. So I want 3 properties, 1 for each kid. I'm going to have 1 more, maybe not, maybe it's for myself. But that's my plan. That's
1 more kid or 1 more property?
Well, that's a tricky question, Alex. Come on, man. But yeah, I want 1 more kid. That's why I want 3 properties, just to own them myself and the bank, so I can say, hey, 1 kid, here's your property. It's going to cash flow 10 grand per month for you. So you can choose to do whatever you want. That's the goal. That's my ultimate goal. Some business plan don't allow you to cash them out. You have to kind of buy them out and things like that. But that's the ultimate goal. You buy properties throughout 5 years, you give the investors their money back, you refinance it, get them out, and keep it to yourself.
Jonathan Gray, I think this could really align with some of the stuff that you had talked about.
That's the way to go. And you're not going to achieve that money and that fast with single family homes. It's like, it's going to take you too much. Just imagine, like, you need 200 houses, 200 loans, 200 property management, 200 everything, insurances, instead of buying 1 property that has $200, So it's something to consider, guys. This is what I consider going big. This is what I consider playing with the big boys, And it's funny because I still today find myself fighting with being a minority, because they all tend to, for example, when I'm partnered with a big boys group, like, for example, those people now for the 700 and something units, they tend to always want to put me as an admin. Like I said, the glorified admin role as a investors relation. And I'm like, no. I want to be an asset manager. Like, don't let people, just because you new, just because you don't know much, to put you in smaller roles. If you decide to go to multifamily, become a big boy. There's another thing about mindset. It's all mindset. You are the big boys, and I'm playing with the big boy leagues, and I want to be with the same amount of risk, the same amount of importance as them, So that's where I am at the moment, guys. Wish me luck. Nowhere close to being anything glamorous. It's like, it's just not there yet. Money is not there. Well, I got my first acquisition check, which is something that you get when you close your first deal. And it was a proud $1,750. Okay.
Hey.
Thank you so much, guys. I got my first payment as a multifamily investor, $1,750. Because remember, I was a small player in my mentor's big team. Not anymore. And he got 10,000. Well, no more. He got 17,000. But hey, I got my first paycheck, so I'm very happy. I need a lot more to make me financial free, but I got my first
Awesome.
check.
No, I really love, the openness with which you're sharing. That's exactly right.
I'm not here to pretend, I'm here to tell you guys it's possible. Start believing in yourself, and there's a lot of ways that you can get in. You don't need money. You don't need good credit. You don't need, I had that. I still have that, and well, less $1,750.
Awesome. Well,
Yeah.
Raquel, I want to thank you so much. You've been awesome. You've been really dynamic and entertaining and informative and inspirational. So really, thank you. Does anyone have any other questions? And Raquel, you're welcome to stay. Usually towards the end of our meeting, we try to just make it more of an informal, like, what are the real deals that you guys are looking at? What are some of the challenges and next steps? And we're going to mastermind and like get some deals done.
Yes. And I put myself out there. Here's my contact. I put it in the chat as well. I love to talk. That's what I did with I remember on the mastermind that I am in, I put myself out there and I say, hey, sometimes you just need someone to bounce ideas, and I know that when you start, it's so hard to reach people that would truly give you an honest opinion, or they are in the same level, because sometimes I used to reach out to people and they're like, what, like they're over here and I'm still struggling to start. So I'm here for you guys. And remember, this is my goal. This is my being here and talking to you guys. I hope I made a very small part of my ultimate dream come true, to make a difference and to be that person to tell you, hey, go big, like go big for your kids, go big for yourself, and look at me. It's possible. I'm on a journey. I'm not there yet, but I'm on a journey. Reach out to me and get you some doors.
Beautiful. Let's get doors. Like I like it. So just from the introductions, I'm going to actually welcome, if you're interested, Jonathan, because you mentioned you have some real deals that you had been looking at. And maybe you could just share with the group just kind of where you are. You don't have to share anything you don't feel comfortable sharing, but it's just exciting because it's a real deal and you're looking at stuff.
I'm glad. I appreciate that. Thank you. And Carl, I'm glad you're sticking around because there's some questions in that I'm hoping you guys can answer for me. So here's the deal. Through a couple of different connections, I ended up with the opportunity at a couple of properties here in Southern Virginia, and they're off market. The owners are actually waiting on me to make the offers, and I haven't moved on it yet. One, I'm concerned about the capital. I needed more education on how to raise the capital. I don't have enough. Finding the deals, I'm fairly blessed, and God's given me a couple of opportunities. I got an email today about another property they're asking me to make an offer on. But I haven't moved on them because I think there's a capital issue. I don't have the cash.
Is it a single family?
No, these are all multifamily. 6 unit, a 10 unit. Yeah, it starts as one's a 6 unit, one's a 10 unit, one's a 28 unit, which for me is pretty big. But they're in different places. The 10 unit is beautiful. It's fully occupied. The management did a great job of taking care of it, but they haven't raised the rents. The rents are about 35% below the market for the area. So there's some opportunity there. And then there's the same thing with the 6 unit. The rents are below market, and that place is absolutely beautiful. The larger one, the 28 unit one, it definitely needs some work. It's fully occupied, but they've let the tenants kind of beat it up a little bit. So, it just needs some work. And that, again, that's new to me. All that's new. I've never done that thing. So my first question is it smarter to try to find the investors to raise the capital first before I put it on the contract, or should I just get these under contract? That's the first thing I'm not sure about.
Can I go for it, please?
Sure.
I want to help Jonathan.
Yeah.
Jonathan, first thing, do you know how to underwrite, to analyze a deal?
Yeah, I'm still new at it, but I have a pretty rudimentary. Alex helped me with some of that too. We've gone over it a little bit. Yeah.
Because that's something that you have to change your mindset. That is not just like a house, and it has to make the numbers. There's a whole study, right, Jonathan? Right, Alex? There's a whole study that goes before you invest in a property that is not a single family. For example, you need to check the city, where the asset is located, because you have to do because that's how you're going to sell it to your capital raisers. That's how you're going to sell it to your investor. You have to say why. Tell me why this is a good investment. Just because it looks pretty, you have to kind of sell it on location. Basically, location is when is good job sources close by, good stores close by, good schools, or just average. They don't have to be the best schools, but you have to kind of like analyze where the property is located. That's the first thing. Second is you're going to check the numbers. How is the property operating at the moment? I like value add, which is basically I get a property in a whole big mess and then I fix it up and raise the rents, right? But you have to make sure that the numbers make sense. For example, if a property is just not collecting rent because it has 3 or 4 in eviction that you need to come in right away and do it, you budget that in your business plan. You have to have a business plan on how you're going to raise the rents. So not necessarily because it's fully occupied is a good sign, because it can be fully occupied of bad tenants. Another thing, how much money are you going to need to rehab it, to make it to standard market value, because you have to kind of do some kind of renovation. You have to check the comps around. That's when you check comps on multifamily. You check how they look, if they have granite countertops, if they have vinyl or just carpet on the floors. You have to check how much money they are charging for similar style units. That's what you have to check. How much money you can raise the rents, and how much money can you decrease expenses. When those numbers make sense, Alex can help you with that, because I hate underwriting. But you go to Alex, he will tell you if it makes sense or not. And then if it makes sense, then now you have a business plan to present it to your capital raisers. When a deal is good, trust me, money will come. That's something that I learned. People will invest if money makes sense. If you have all of the fears questions, like how are you going to raise the rents? People are going to be able to pay for the rent increase. Is a city that has a high demand. That's my gem. I always look for markets that have low inventory. Basically, it's like whatever is there is what is in there, and high demand. So make sure that all of the location first ticks all the boxes, and then you go to numbers. Make sure the numbers tick all the boxes, and then you create a package of your business, and you go shop around to people. Or if you don't have access to people, you can partner up with other capital raisers that will eat a little bit of the share, but they will bring the capital. But the deal needs to be appealing. You have to create a deal package that is like juicy, and as inflation has all kinds of hedge in there and is good and numbers are safe. You have reserves, you extra conservative with your numbers. You can do any deal like this. Just make sure that you check the property numbers and make a deal package together.
Okay, so thank you for that. That was extremely helpful. Now, this is not a huge town. This is a small Virginia town. Does that matter? Or,
no, because I love secondary tertiary markets. Why? Because it's less competition. I can't get a property that has all of the big Dallas guys wanting to get here in Dallas. But right outside, that's my first property was in Macon, Georgia. Is a town an hour from Atlanta, and people are migrating. Remember, recession, people leave the main cities and go for the secondary tertiary areas. And you're going to be there ready to have them with a nice, brand new rehabbed place and a little bit below. You don't want to be the market leader on rents. Like, for example, if rents are all 1,000 for 800 square foot unit, you don't want to be the 1,000. You want to be a little bit below. So then like that, you always fully occupy. So it doesn't matter as long as you check the population census, and you check if the population is growing or decrease. For example, an oil town is not a good town because the moment oil is down, people will migrate and go somewhere else. And then you end up with a high vacancy rate. But for example, a town that is right outside the main town that people are migrating in recession times are perfect. You just need to check the population census and see if it's growing. It passes my phone, even if it's steady, like it's not decreasing or increasing, it's just steady. That already hits the number, but you have to check. And you have to check when I receive a deal package, it always shows in there, like Walmart is down the street, Tesla Center is right over there. You need to check like if there's jobs, because people want to live close to where the jobs are. So you check for like major employers, and check like that. It doesn't matter if it's a big or small city. I love small towns, but it has to kind of be steady. It has to be a good amount of people living in there, but you can make it work. I would love to look at it with you though.
Okay, thank you.
And Jonathan, just to add, one of the things that a resource that you can look at that kind of gives you an idea of maybe some of the things you should think about when you're approaching investors is there's the Emerging Real Estate Trends report that comes out annually. It's published by PwC and the Urban Land Institute. It's kind of big picture in terms of the real estate market as a whole. But you can kind of see, they talk about both the positives and negatives about the market. So you can kind of use those negative points to kind of figure out, okay, these are the things that investors might ask me about. So I should have answers ready for them based on my market.
Give me the name again, Aziz. What was the name of that?
It's called the Emerging Real Estate Trends Report. It's published by PwC and the Urban Land Institute. There's a version that's issued annually every year. So you want the 2023 version.
Thank you.
No problem.
And I guess, for me to just also chime in a little bit, Jonathan, is I would say forming your team, especially as like a brand new beginner, right? Like Raquel did it too, right? She went with her mentor and she had someone she kind of had in place to ask questions so I'd say for you, like you actually have deals that you're really looking at, and for you to dive in and just take one without that reliable mentor is kind of taking a leap into the dark.
I agree. No, I agree.
I'd say probably form your team first and kind of have at least maybe a few key people that you're going to be reaching out to and to get some consensus before to say, like, if you do this, I'm going to take the leap with you before you really jump in,
100%. That's the core of syndication. That's the core of tackling a large asset is team. You can never do it. That's another thing that you have to switch your mind by like, yes, you're going to receive a smaller pie, but right now you can say that you have X amount of doors, but you can only tackle those big doors if you have a good team.
Who should be on this team?
Sorry?
Who should be on this team?
So, for sure, you're going to need another thing that you can hire right away that is going to help you a lot too is a property manager. I don't know if you want to manage it yourself because
I don't.
I hear horrible stories. You don't want to be on the call. You are an investor. You need to have your roles. You are the investor, the owner of the property. You're not the guy that's going to do there and fix the plumbing issue at 10 o'clock at night. You're not. So then you will have to hire property management. When we were joining the mastermind, he said that your 5 components team that you're going to need right away, your boots on the ground team, as I like to call it, because there's 2 kinds of teams, right? Your executive team and then your boots on the ground. Your boots on the ground is going to be your broker, people that sends you your deal, your your property manager, which is people that are going to do the leases and take care of the maintenance call. Then you're going to have your maintenance and rehab crew, like people that are going to rehab it for you. And I always suggest you to go for rehab projects, because that's where the biggest upside is. A little bit more of a risk, but that's how you truly can see the money when you get a property that is just, and it can be as easy as just painting and new floor, new carpet, freshen up. Already, you don't need a whole gut rehab, just try to find something. That's the reason why it's on the below market value. It's probably because it needs fixing. Those ones are the gold mines. So your construction crew to do it, and then your lawyers and your lenders as well. So this is your boots on the ground team. You need all of these. You need your lender, your broker, your contractor, your property manager, all of this. And then you need your executive team, which is people that you're going to partner up to get the job done. Some people that have skills that you don't have. For example, an asset manager, or let me see, an underwriter, like someone that you can bounce your numbers that can tell you if it's a good deal or not. How you find this is meetups like this one. Always joining Facebook groups is another great way to connect with people. You can find capital raises this way, but your deal has to be strong. Your deal has to be gold, and then you post in one of those groups. That's how I use it. I go to my Facebook and I type multifamily group or multifamily capital raising group in my city or anywhere. Join all of them or whatever investments you do. Join these groups and you post it in there. Hey, looking for partners to tackle this property. This is the location. This is more or less the return. And who wants to partner up? And then you do a Zoom call. Always do a Zoom call, never phone. You always try to see them face to face, and see if there's synergy. And remember to be careful who you partner up with as well, because you kind of set in a marriage for 5 years. It's like, and some people go as far as doing background checks, because if they did something bad, the whole entire project can go down. So I don't quite do that, and I pick and choose my partners. But it's easy as just typing their name on the internet and you see. But be careful who you partner up with as well, because massive deals come with massive consequences as well if something goes wrong.
I don't want to hog all the time, so I will definitely email you some questions.
Yes, I will. I will love that. That's my purpose. That's my ultimate goal. Beyond money, I want to be able to help people. I want to be able to give your grandson an apartment building. Well, we're going to give him, but I'm going to help him.
I want to get all 3 of these properties if it's possible. So I mean, that's my ambition. Because they're sitting there, so I'll definitely take my brain.
Yeah, let's look at the numbers. Let's see if it's worth it.
Okay.
And then come up with a game plan. Who you're going to need to contact, what's the next steps, and things like that.
Okay, thank you.
And for everyone, like you guys have my email. If you guys have any questions, I'm not an expert. I'm only in here. Anything that I don't know, I will email Alex. Hey, Alex, tell me this answer so I can sound smart.
Raquel, I've got a question for you.
Sure.
What do you do to find the properties on which you'd like to write a deal?
A couple of ways. The way that the book says is to find brokers. So there's a whole art on finding brokers when you broke, like myself. Because you normally it's truly as ugly as you have to fake it until you make it, big time. That's how you're going to have to sound to a broker. Because if a broker asks you for a proof of funds, he doesn't believe that you can tackle that property at all. And you don't want to waste their time, right? They're talking to people that can buy millions of dollars worth of property tomorrow. And then this girl call you, and have an accent. You have to pretend to sound good, it is like that. I'm telling you guys how I did it, and Michael Blank says it exactly how to say it. First you contact how I find the brokers. Sometimes you can type it online, like commercial brokers Dallas or commercial brokers in the state that you want to invest, right? It will come up a vast number of names and kind of all over the place. What I like to go is I go to LoopNet and I see the properties and I see who the agent is, and then I contact them. Because more or less I see like, okay, they are doing this kind of sizes deals. Never go for deals out of LoopNet or Redfin or anything like that, because normally there's a rule that if it's there, it's because it's not good. It's for beginners. But I have some people that did a good amount of deals through LoopNet. So you never know. You be very careful when you find a property already in the market. So the ways that I like the most is go on LoopNet. You type the city that you want to invest and more or less the number of doors that you want, right? And then it comes up with a list of people, of properties. Don't look at the properties, but look at who is listing it, and then you call. And the script is going to be kind of like, hey, because it is true. I'm not lying. I'm just pretending. But the story is, hey, I work with a group of investors, which is basically what you do. You're not going to tackle it on your own because you don't have the money. I work with a high net worth individuals, and we are looking for properties to invest in your area in Dallas, Texas. We are looking for properties around 50. My script when I call. Hi, my name is Raquel Adkins. I work with high net worth individuals, and we are looking to purchase an apartment building in Dallas, Texas. More or less, our cap rate is I go in a little bit of technical words so they think that I know what I'm talking about. But if not, you can be as simple as my max purchase price of $10,000 or $10 million, below 100 units. And in this area, value add, because I don't want anything already done and pretty. because with that, you only in for appreciation, which is not my business module, depends on your business module, right? But you say the script. I work with a bunch of rich people and we are looking to purchase an apartment building. They never ask me for proof of funds, but that's the script that I use. Because if I call and say, hey, do you have any apartments sell? They're going to be like, yeah, sure. Send me your proof of funds and I will see if it's worth it, my time. So you say you work with a group of investors and we are looking to purchase something in this area, this many doors. So that's one way. And I get a bunch of them. You have to establish a relationship with them. It's basically kissing their butts, to make it prettier. It is, because why are they going to send it to me, not to their other guy that bought millions and millions with them, They're going to send it to me because I send them pizza on Friday, They send it to me because I send him a business happy birthday card, So that's basically establishing a relationship that everyone talk about, and I never knew what they were talking about. That's what they're talking about. Because they were saying, like, take them to dinner. I'm like, it's going to sound so flirtatious, and I'm not going to, how awkward is going to be me sitting on a dinner with this random broker. So what I did is I send them a pizza or I send them a birthday card. I just write when is their birthday, Merry Christmas card, because then every time that you send them something, they remember you. So now if they have a property that fits your criteria, they're calling me, So that's one way. The next way that I'm starting, actually last week, I started doing this, which is trying to find your off-market deals. Become a wholesaler yourself. Basically, my drive from my house to my mom's house, I pass maybe 20 apartment buildings. I get the numbers and the addresses. And sometimes I call property management, say, hey, do you know who owns it? Do you know if they ever thinking of selling it? They are not going to want to do all of this because sometimes you can kick them out. So they don't want to give you all the information. But sometimes they will be like, oh, yeah, it's this and this, and then give you your number, and then you cold call straight up and like, hey, my name is Raquel Adkins. I work with a group of investors and we are looking to purchase an apartment building in this area. And I saw yours and it fits my criteria. I love this apartment. Have you ever thought of selling it? That's your script for cold calling, Or sometimes you can show up at the listing office and try to ask that way. That is when you truly find properties off market that makes number beautifully. That's going to need is selling way less than market value, That's like the gold mine is finding yourself the properties. And the third way is trying to find wholesalers. But be careful when trying to find wholesalers, because the way I find wholesalers is on those groups on Facebook. I go there and say, hey, looking for properties and dollars, minimum 10 doors, 10 to 50 doors, max 5 million purchase price. Do you guys have anything? And then you will get a bunch of it's like a train of people. Basically, they get the deal from LookNet and try to shop it to you for commission, and then you type the deal online and you see it everywhere. So be careful with this kind of wholesalers. So to find a good wholesaler is as hard as finding the deal off market. So be careful with that. And sometimes they will ask you for money, like send money and I will send you a deal. Do not do that, So there are ways to do it. There's 3 ways. My favorite way is brokers. I know it's going to come with a higher price and it's basically a market deal, but at least you're not going to be scammed. And sometimes you get good deals this way.
Yeah, there's a statistic. I think it's something like 80 or 90% of all multifamily apartments that are sold go through brokers. So there's some crazy number like that where it's like just the vast majority of deals are going to happen. They make it their living, right, Cam? It's their job to know who the owners are, and
especially because they don't want to advertise that they're selling the property like this. Like say I own a problem, I want to sell one of my properties. I don't want to put a for sale sign because the tenants is going to see it and they're going to be like, I want to get out of here. They trying to sell it. Sure, they're gonna. I don't know who is coming next. So it's tricky for them to advertise. So I'm sure they go through the process of brokers to sell my apartment building, and then they hire someone. It's way better than finding a wholesaler. Like I can imagine how much they're gonna ask them. But then maybe you can come in at the right time and say, hey, you want to sell it for me? Before you go in the market. And sometimes you get it like this. Sometimes it's a long process. I used to get houses for flipping like that, off market. Me calling, me going there, knocking on the door.
Well, guys, I want to just be respectful of everyone's time. I know we normally go up until 8:30. This has been a really lively, good conversation, so I don't want to stop it. But I just, wanted to say that I know for me personally, I will have to go in just a few minutes. I'll be happy to give the hosting authority to someone else if you guys want to continue. And I did want to throw out one question because I think I remember who your mentor was, Raquel. And if I remember correctly, he finds deals in a really unique way. Am I right? Was it
Duhamel?
Duhamel? Yeah.
Belong?
I listened to his episode when he was on Michael Blanc, and I can't remember what he did, but it was something very different.
No, I don't remember either. I'm going to ask him.
Oh, okay. Yeah.
I'm like, hey, someone told me you have, no, but he has contact with a bunch of very, very good wholesalers.
Mm-hmm.
Yeah, he cannot keep up with the amount of deals that he has. And they all $50,000 per door. Like I am buying something here for $130,000 per door. He's buying for 50, So he has good contacts, but I'm going to ask him. Like,
okay, interesting.
Something from me?
It might not be part of the normal Michael Blanc curriculum. Maybe that's what's going on.
Thank you, Alex.
Yeah, you gotta.
I will let you know, Jonathan, if I found another way too, or Kim.
Thank you.
All right, guys.
Appreciate it.
Well, again, I'm gonna jump off, but I'm gonna give. I guess if you guys want to, I'm just gonna give Cam hosting authority, and I have to go put my little lady to sleep. And so my little girl's 2, and she's going through a sleep regression. She forgot how to fall asleep. And so I just want to thank you guys. This has been a good call. I appreciate everyone for the participation. I hope you guys got a lot out of it, and we'll be back next month. We'll communicate in the next few, days or weeks, kind of exactly what the plan is. We're trying to do something a little bit different. We're going to try to do something in person for December. But we're still working some of those details out. So Raquel, thank you again. Okay. I'm going to go ahead and jump off, but thank you guys. Bye.